Okay, so let me see if I have some users things open. Close this. Close this. Okay, perfect. Let's get started. Let me see if it's recording. It's recording. So it's a refresher, May 11th, 2019. We're basically gonna go over like how do you identify this phenomena called breakout, right? It's basically how the candles move through areas, right? And that movement is basically called a breakout, right? And then there's certain things happen, when candles reach an area where candles have previously rejected from like important price levels. So those are rejection areas too, right? So we're gonna go over all of that here. Can you please post in Ted's chat? Let me see. It's posted in Ted's chat. That's why you are here, because it's posted in Ted's chat. Is it? Let's see. Yeah, it is. Okay, perfect. So that's the number one. What's a breakout, right? A breakout happens when you look left. When you look left, let's say you have a resistance area here, and you have a support area down over here, right? And then the candles are moving up, down, up, down, up, down, and then all of a sudden you have a candle that moves up, right? Now, when you look left, you'll see that the candles were rejecting this area, and now you have this candle moving up, right? So now this candle is doing something that these previous candles could not do, right? So now you're thinking that, okay, you know what? This could be a breakout. So what happens is now there are probabilities, right? The probabilities are that there's a higher probability that if this is a 30-minute time frame, or let's say if this is a 1-hour time frame, right? The probability of this move to continue up is higher than the probability of it moving down, right? So for the sake of simplicity, what we're going to do is we're not going to include fake outs here, because that just confuses a lot of people. So we're only going to focus on the trend, right? So in this case, the trend is up. So what happened was price came up, it reached into a consolidation area because it found resistance, and then it found support, right? Reached a consolidation, broke out. So now when you're trading the trend, you're looking for these moves, right? You're looking for candles to do things that the previous candles could not do, right? So when you're looking at the charts, you're only looking at candles, and that's all what we see. So it's very, very important for you to know what candles are doing, how to study candles, how to tell, in a way, like how to tell a story of candles, right? So that's what a breakout is like. It's a continuation of trend, right? But before it happens, always remember, I repeat it again, there's going to be an area of consolidation, which what they call is that price is going to create a box. So this is your box, and then you have a candle that breaks out, and then what you expect the next candles to do, what do you expect? Will it continue? Now, there are two things are going to happen. Either the candles are going to continue moving up, or what they're going to do is that they will try to form some sort of a support. And that support, like, you'll have to wait for that support, because after you have a break, the next candles will continue down and they will create a support. What most people do is, it happens all the time. It used to happen for me too. Like, once you have a break, right? Well, now you don't want to miss out a move, so you take a buy right over here. What happens when you take a buy right above here? The candle starts to move down, and you're like, oh shit, I become the weight. So that's where you get the perfect entry for a sell, but in the opposite way, right? So you took a buy anticipating a move up, but then you have a move down. So what happens when you took a buy up over here? When you have a buy up here, you always got to think, right? The step number one is to think that, okay, if you're going to take a trade, where will your stop loss be? Makes sense? So if you're taking a buy here, where do you think your stop loss is going to be? It can't be down over here, because the important zone that broke was down over here. So we're going to go over a lot of examples here later on, but this is just for the sake of explanation. But a good trader will say, okay, you know what? I took a bad entry up over here, so maybe a stop loss down here would make sense. So now think about it. You have a wide stop loss, man. Like, you have a really big stop, which is just below the breakout handle. So what you got to do is you have to wait for price to come down, and then you have to wait to see if candles start to form support. We do this every day. So you have to wait for candles to start to form support. The basic rule is that when price does a breakout, either if it's to the upside or to the downside, you have to wait for candles to come to the breakout level and form a bullish or a bearish candle respectively, right? Because then and only then you can say that, okay, like, you know what, the candle broke out, it came down to do a retest, and now it's trying to form a support. Good support levels you can find basically on the 30-minute or the 1-hour charts, because they are mostly, what's the word? Like, they have strong confirmations. Most people, what they do is they will start to look for, let's say you have a breakout here. What most people do is they'll start to look at the 5-minute or the 15-minute, right? So now that's not a bad idea, but it's also not really a good idea too, because they have very, very weak confirmations, right? Because what's going to happen is that on the 5-minute and the 15-minute, you're going to see a lot of candles going up and down. So that's going to sway you off your analysis, right? Plus, what's going to happen is that you're going to see a lot of false confirmations, right? And they will not be quality confirmations. This is very, very important. But when you look at the 30-minute or the 1 hour, you start to look at now your confirmations are going to take time, but they will be quality confirmations, right? So let's say you have a breakout here, the next candle goes down, you have another candle going down, and the next candle, they start to form a support, right? So then you can say, okay, you know what, we've started to form support, and now you can initiate your step one. Your step one is, okay, we have found support. Step one is stop loss, right? Stop loss, you can say, okay, we found support. Obviously, stop loss has to be below support or above resistance, whatever the case is, right? So you place your stop here, and then you play the game of odds, right? There's always a probability, right? So whenever you take a trade, you're counting on the fact that, okay, what's the probability that this breakout has happened? There's a support formed, a trend is bullish. What's the probability that it's going to continue moving up, right? The probability of it moving up will always going to be higher than the probability of it breaking down. So you always have to keep that in mind. And when you keep that probability in mind, you keep your risk in mind, you're no longer afraid to take a trade, right? You're no longer getting antsy about the trade. You're no longer saying that, oh, what if it goes down? Because you have your confirmations, you have a breakout, you have a support formed in a bullish trend, and you're comfortable with taking that risk. So now, for example, let's say that you don't wait for price to come down to form support, and you take a buy right above here, and then you have candles moving down. So now, obviously, you're going to be afraid. Obviously, you're going to say, oh, shit, what do I do now? Candles are moving down, and then you're going to close your buy, and then you're going to take a sell because you're like, oh, shit, we're going down. And then that's just going to create a whole bunch of confusion, right? So it's very important to wait for candles to break out the levels which the previous candles could not do, right? We're going to go over some examples later. A breakout happens when a candle goes through an area which other candles couldn't, right? That's why they gave the name of the candles as like a gladiator candle, right? Because the candle did something that the previous candles could not do. I'll repeat this again and again and again, because that's what the probability dictates that things are going to happen. Most times there will be retest. Other times there will be no retest based on volume. This is very, very important, right? Because sometimes what happens is that you have a breakout, and then you're looking to you're looking to enter on a retest, right? But sometimes what happens is that there is no retest. There's so much volume in the market. The candles are so huge that they keep on going and they give no retest, right? That happens. I think that happens, 30 to 40% of the time it happens, right? But most times there will always be a retest. Sometimes, what's going to happen is that that you're going to have a candle moving up, right? And then all of a sudden you'll have a wick like this, and then another candle starts to move up, right? So what this will mean is that this wick down here would be a kind of like a retest, that it did a retest. This happens too, right? And this takes a lot of practice and experience to execute on this situation, right? But when you're starting off, what you're basically looking at is, let's remove this here. what you're basically looking at is you're basically looking at candles moving down, and then you're waiting to see if the candles are trying to form some sort of a support, right? So now when you have something like this, and then you can turn around and say, okay, you know what? We have a bullish trend. Candles made a high right over here, right? You have a high. So now there's a 70% chance that the price is going to retest that high, right? Now on the higher time frame, this move is going to look something like this. Let's say this is the 4-hour time frame. So this is what's going to look like. So let me just do this. Let's do this, right? So this candle moving up would be these small candles moving up to retest this high. Make sense? So you had a break right over here, and then price made a high, and then now you're saying, okay, you know what, we've made a high, so now I'm probably going to wait for price to come down and create some sort of a support. Candles move down, you have a support because look, this is a bearish candle, and then you have a bullish candle right over here, right? So when you look left, you're like, okay, this was a breakout, so probability dictates that since this is the 30-minute or the 1-hour chart and we're forming support, so now this tells me, okay, we formed support, I can probably have my stop loss down over here. Because once I have my stop down here, I know that, okay, as long as price stays above this level, we should continue moving up to possibly fill this range, right? And then on a higher time frame, this is going to be the wick fill right over here, right? Some people ask me about wick fills, so that's how you gauge your wick fills, right? But sometimes there will be no retest. It happens. It's totally normal in the market because the market flows in its own ways. Like it depends on the volume. It depends on what's happening fundamentally. It also depends on whether there was some high volatility news or not, right? Because if you get no retest, that's okay. Because your plan dictates that you're always going to look for candle to form a support at a retest, and then you're going to enter your trade. Right? You have to be very specific with your trades. It's very, very important. See, you can ask questions on the go too. So, but I'm going to make sure I answer all the questions before they're even asked. So we're going to do this. All right. So let's say that we have a situation like this, right? So you have a resistance formed here, and then you have candles moving up, right? Provided that, let's say that you missed out on this retest. So now you have candles moving up, right? So what do you do after this? Now, sometimes what's going to happen is that guy's going to say, okay, you know what, since this is a 30-minute chart, so I'm going to place a stop loss down over here because they said that in the webinar, and then I'm going to target for this wick fill, right? What you don't understand is that there is a resistance area here that was broken, because when you look at this level here, look at this candle, it was bullish, and then you had a strong bearish candle, right? So when you have the strong bearish candle, you also got to look at yourself and say, okay, so why did this candle happen? What was in this area that made this candle go all the way down, right? It was probably something strong. So now what you got to see is now all you got to do is you just got to wait to see if the candles will actually come down to this area, because if they do, you have a higher chances, a very strong probability of candles to continue moving bullish, right? Because we've made a high right over here. So let's see what happens. So you have this candle coming down here. So now what do? So do you take, how is that a retest when it never broke that resistance? Oh no, that was just for like, that was just for example purposes. Right? But we're focusing on what's happening in the now, right? Now, what's happening here is that you have a candle coming down, bearish. What most people will do is that they will take a buy right over here, right? They'll take a buy here. Now, it's not a bad trade, but it's also very risky because the candle is moving against you, right? You have to enter trades when candles are moving in your direction. If you're looking for buys, you want candles to move in bullish. Right? If you're looking for sells, you want candles to move bearish, right? So now when you look at this, you're seeing that, okay, the candle is moving bearish. And when you look left, you see that, okay, it's coming into that zone. So what do? You have to wait. You have to wait to see if the next candle can give you some sort of a confirmation that, okay, we are now trying to form bullish, that we're trying to form some sort of a bullish idea here, right? So entering at this bearish candle, it's like you're saying that, okay, the next candle, I'm anticipating it to form bullish. That's in a way saying that, okay, you know what, I'm gambling my trade to see that if the next candle will form bullish or not. Because if you're entering here, where's your stop loss, right? Where's your stop loss? You can say that, okay, maybe my stop loss is down over here. And this is a huge stop loss, man. Like, look at this. You have no confirmation. This is a huge stop loss. So you're waiting. Now look what happened, right? You have a bullish candle that formed right over here. And when you look left, you're seeing that, okay, you know what? This is resistance here, and we have a bullish candle. So now probability dictates that since price made a high right here, and then we had a breakout, and then you have a bullish candle formed. So maybe, like, you know, now you can place a condition on your trade and say, okay, you know what, as long as the price stays above the low of this candle, we should be continuing to move up to fill this range. Make sense? And these are the trades that we've taken on Mixer every day, because you're just waiting for price to do something that you want to see, right? So let's see what happens here. Nice. So we're continuing to move up, right? So now what you're looking at here is looking at the candles is that, okay, this candle formed bullish at support. So now even though this candle had a small body, which means that there's less buyers because the body is small, but eventually you have these wicks forming higher lows, right? You have higher lows forming, and look at where this candle closed. This candle closed higher than the previous candle, right? So you have a higher low and you have a higher high, right? So what do you expect for the next candle to do? It's probably going to move up. There we go. It moved up, right? And you still have your stop below this previous candle here. So now the most important thing is, now what do? Now how do you manage your trade? Because you're in profits, right? You have your stops. So now you have choices of either move stops to break even, or you want to take profits. Why you want to move it to break even? Because look at this area right here, right? It's approaching this price level where the candle rejected it, right? So now there's a higher chance that the price is going to reject this area, or it's going to play around and continue to move up. We don't know what's going to happen because this is now acting as a resistance. So it's always a good idea to place stops at break even, because once you place your stop loss at break even, you have a risk-free trade, right? Because imagine this. Now, all a trade is that you're placing a straight line on a chart, and then price is either moving above it or it's moving below it, right? A dream of a trader is to have zero drawdown, minimal drawdown, and the price moves in their direction. So once you have a trade, let's say you took your trade right over here, right? And now you have your stop loss in profits as well. So now you have a risk-free trade. Nothing can take this away from you. You have to realize that. Always realize this. Nothing can take this away, because now you have a risk-free trade and you're at this resistance and you're not sure whether it's going to break it or reject it. So let's see what happens. See, we have a break up. It's all good. And then look what happened, right? We have a move down. So that's why it's really, really important to secure what you can and let some run with stops at break even. Because, like, man, this candle could have easily, like the next candle could have easily went up, right? So let's continue, move on. All right, so we have this situation right over here, right? So how do we handle this situation? So first of all, what we see is that there is support, right? Because you have these candles creating wicks in this area. So when you see these wicks, this means that there is some sort of a rejection happening here, right? And when you look at the price to the left, you'll see that, okay, maybe this price or whatever price this is some sort of an important price, because that important price is making candles jump, right? So on the other end of the spectrum, now when you see this bullish candle, are we anticipating that prices are going to continue moving up from here, right? I'd say that it's going to be pretty hard because, yeah, what's that? Oh, okay, mute. Okay, so there's a very less chance that price is going to continue moving up, because once you look left, you see that this candle here got rejected, right? You see this candle here through a wick got rejected. And when you look further left, you see this candle here through a big wick here too. So for me to take a buy here, it's going to be pretty risky, because, you know, now I'm anticipating price to continue up through all this area and then having a wide stop down over here, right? The best scenario here would be to see if price is going to form some sort of a support, maybe, you know, down over here. So you can say that, okay, one support we have down over here, and the next support maybe we have down over here to continue moving up. So in a way, you're saying that, okay, like, you know what, we're trying to form steps. One step is here, and then the second step would be up over here. But we're not sure what's going to happen. So basically what you want to do is you have to wait for a candle to close. So let's see what happens when we go to the next slide. We have a move coming down, right? Now, is this a trade entry? Is this a valid trade when candle is moving against you? This is not a valid trade, right? There's nothing saying that we are moving up or we are moving down, because this candle is against us, right? Like if we're saying, okay, we're moving up, we have a bearish candle. So now, man, who knows? The next candle can also go bearish, because now you can say that, okay, oh, we formed resistance and we're going to go down to this support, right? Or we can say, okay, you know what? This is probably going to do a retest and continue to move up. What's the probability that it's going to move up or it's going to move down? It's 50-50. Right? Like we don't know, because we've jumped from support. This candle is bearish. Like, are we going up? Or, you know, we've formed a resistance, but at the same time we've jumped from support. Are we going down? We have no idea. So what we got to do is we got to be a good boy, and we have to wait for the next candle to close to see if we can find some sort of a confirmation. There we go. We have a bullish candle that formed like this. Now what do we do? I don't think we can do anything here, right? Because remember what we talked about, candles with no wicks? Candles with no wicks means that if this candle has no wick, this means that this candle has no range for the next candle to go down. Or now if you're saying that, okay, we're trying to move up, where are we moving up? Because look, it's still throwing wicks in the same area. This gets really hard to trade, right? So when you enter a trade here, you have no clue where it's going, man. Like you have no idea where it's going to go. But still, like, you know, if you're stuck in that, if you have married your analysis that, okay, we're moving up, it's not going to last for a very long time, because this is it's just so hard to take a trade here. So what do? We wait for the next candle. Let's see what next candle says. Oh, look, next candle closed bearish, right? But it still closed at this resistance. So this means that now we are trying to form resistance here. And now what we see is that this candle, it has a wick going down, which means that, okay, like, you know, you had 1, 2, 3, 4 candles could not break up. You had 4 candles that could not break up. So we're forming resistance, and now price tried to go down. It went below these candles and it formed a wick. So this means that this candle has formed a range for probably the next candle to continue going down. So now there are 2 ways you can look at this as, right? Either you can take a risk by saying that, okay, we might want to place a stop above here, anticipating the next candle to move down. Or what you can do is you can probably wait for the next candle to see how the next candle forms, so that you can have more conservative so that you can have more conservative confirmations. Ooh, big word there, conservative confirmations. Interesting. Okay, let's see here. We have something going in the chat. Is this webinar recording? Yes, it is recording. If it wasn't, a lot of people are going to come to my house. All right, let's see what next candle does here. Perfect. Now we have a candle moving down, right? Now, is this still a good trade, right? I would say that maybe this candle was the trade right over here, but at the same time, we're approaching this support. So this trade is a very risky trade because in a way, we're just ranging here, right? So this is a very risky trade. We're going to go over some examples which are risky and less risky. So this goes into a very risky trade. Let's see what happens next. Still ranging. And then, you know, you had like a little bit of a fake out, but eventually we started to move up. Always look to the top left corner. Yeah, exactly. So let's go through what happened when these candles started to move up, okay? So you waited here for this candle to form. You waited here for this candle to form. So this candle broke out here, right? This candle broke out. So now essentially what you had to do is you had to wait for this candle to form some sort of a resistance to move further down. But what happened? This candle closed back in the range. So now there was still no trade. And then you had this candle form with a wick, which is still no trade. And then you had this bullish candle, which moved above all the candles to the left. Right? So your trade would have been on this candle, after this candle, because you wanted to wait for a rejection. But either way, in this consolidation, this was very hard to gauge what's going to happen. Right? Very, very hard to gauge. This is where most people, take loss. Oh, what's this? That makes sense. Yeah, so this is where most of your losses are going to come from, because price is going to start to range and you will start to take buys, you will start to take sells, you will start to see things that don't exist. And, you know, at the end of the day, you're going to end up with like a large chunk of your account gone to the market, right? And then you can't call the market, say, hey, I'm sorry, I didn't want to take this trade. You know, so this happens. So when you have resistance formed and you have support formed, it's very important that you just wait or you just stay away. Because sometimes, some days, what's going to happen is the price is just going to range. You know, price is just going to range. And if you're trading, let's say you're JPY and price is ranging, and there's no trade because you're just waiting. You're waiting and waiting and waiting. I think that happened on Thursday too. We were in Euro JPY buys and price is just ranging for so long. I just exited our positions because it reached our comfortability level that, okay, we could not hold it anymore. All right. What candles reach support? Okay, so this was supposed to be what happens when candles reach support or resistance. Okay, how do you know if it's an easy day or a hard day, or is it easy to spot on candles? Yeah, so we're going to go on some examples here. So your question is going to be answered. We're going to ask questions at the very end because most of your questions are going to be answered. All right. What happens when price is trending bearish or bullish, right? What happens? So you come to the charts and you see that you have bearish candles forming, and these bearish candles are moving down, right? You have big bearish candles moving down, and to the left-hand side, you see some sort of a support here, and you have bearish candles moving down, right? So what do? Normally, what you would do is that you would say, okay, you know what? Since we have bearish candles forming and there's a 4-hour support, so we're going to try to take a buy here, right? So this is a very bad idea because all the candles are going against you. Your idea is correct that you're trying to take a buy on support, but then you have to realize that all candles are going against you. You know, they're all bearish candles. There's not a bullish candle in sight. So you always have to wait for candles to at least turn bullish so that then you can say, okay, you know what, maybe now we have found support. So the probability of it rejecting is higher because on the 1 hour and the 30-minute, we have found support. So there's a high probability that now we're going to start to move up and maybe retest the level that was broken or whatever the case is. But once price is moving down and you see that the destination of support is close by, just wait. Just wait for price to reach that area. and then wait for price to form some sort of a support on the 30-minute or the 1-hour time frame to see that, now we are forming some sort of a rejection to continue in the opposite directions. Now, that's going to be a counter trend trade, but you have to understand that smaller time frames, they create the overall higher time frame, right? And the same case is when you have candles moving bullish, you have larger candles moving up, and then they're reaching some sort of a resistance. So we're going to use the same support as resistance here. We're reaching resistance and you're trying to sell. A lot of people do this, like on Wednesday, I had someone taking sells on USD/JPY in Asian session when it was moving bullish, right? So when it's moving bullish and I had 2 hours of REM sleep. So when it's moving bullish and you have resistance, your idea is correct to take a sell, but you have to wait because you never know, man. This candle can just continue moving up. This can, or when the candles are bearish, these bearish candles can continue moving down. Like a lot of people here have faced that. Like when you're trying to take a buy, when the price is trending bearish, you're trying to take buys, you get fucked because candles just keep moving down and you're saying, oh man, what's happening? I moved my stop loss. This thing is still moving down. Like, when do I close? When did it stop? And when it's moving down, you start to panic because then you start to look left and you start to see imaginary supports, right? You start seeing imaginary support and you're like, okay, well, it's moving down. This is probably the support. And by the time price reaches this area, what happens? You have a massive push down and then the next candle starts to move up. That's happened to a lot of people here, right? This happened to me too. It's very normal. Like it has happened, because we're trying to call, this is what they call is that you're trying to call bottoms when price is moving down, that you're saying, okay, we've reached a bottom without price forming a bullish candle, or it's called calling tops, that when price is moving up, right? And you're saying that, okay, we've reached the top area, so now we're going to sell right over here when all candles are bullish. So you have to wait for candles to form bearish or bullish, like whatever you want, right? You have to wait for candles to form in your direction so that you can say, okay, now I have some sort of confirmation that candles are going to move my way. Make sense? So just don't take opposite trades when the candles are moving. Like it looks good that you had a wick entry, but it's not going to happen often. Right? It looks good for Instagram. It looks really good, but it's not going to happen often. Trust me. All right. What do we have here? Always look for potential areas of destination. Yep, exactly. So this means is that when you have price moving down, right, and you're looking at a support to the left, so that's your destination, right? This means that once price is moving down, now you have the opportunity to maybe take a trade till that support. Because think about it, right? Now, there's someone out there who is trying to take buys when price is moving down. So more often than not, those buys are going to get stopped out because the momentum, because the momentum is bearish and we're moving down, right? So when you're looking to see that, okay, wait a minute, so if we're moving down and there's a support over here, and there's strong bearish momentum, we are in New York and London overlap, there's a high chance that price is going to continue down to this support, right? So what do? You jump to the smaller time frames and you start to see that, okay, now when price is moving down, it's probably going to do something like this and then start to move down. So you're looking for mini resistances to be formed maybe on the 30-minute or 15-minute to see that, okay, now if, like, you can say that, okay, maybe if a resistance is being formed somewhere over here, and then you can say that, okay, now we can probably have a stop above this area because the trend is bearish and we're selling resistance in a bearish market. So there's a higher chance that price is going to come down to this support. Makes sense? So that's what you say, okay, now we're trying to trade the trend. Because in the opposite spectrum, if you're trying to take buys, man, you're just counter trending right here when there's no confirmation, right? So always look at it this way. And in the opposite way, when price is moving up and you look left to see that, okay, there is some sort of a resistance here, and this is where price starts moving down. So there's a higher chance that price is going to continue moving up, and you look for the same things to happen, right? Sometimes price is going to do something like this and will move up, right? So if you are not looking for confirmations, you're going to look at this area and say, okay, now we're consolidating, so we're going to move down. But eventually what's going to happen is price is going to spike up and move up to where it wants to go, and then maybe it's going to form some sort of a confirmation to move down, right? How many times has this happened that when price is moving up, you take a sell, you get stopped out, and then you look at the chart after 2 hours and price has reached where it had to reach, and then it had fallen all the way down. This has probably happened a lot of times to a lot of people, right? It only happens because you did not wait for candles to move in your direction before taking the trade. Make sense? Makes sense. So it's always the probability that there's a higher probability that you will win a trade if you wait for candles to form in your direction. Now, what do big candles move in one direction? Oh, what do big candles moving in one direction mean? So this point means that, let's say that you come to the charts, right? You come to the charts, and what you see is that you had resistance and prices forming, and you have big candles moving, right? What does this mean? When you have big candles move and you missed that trade, that means those big candles were your trades, right? Most times what happens is that when we come to the New York session, we see big moves happen, right? These big moves happen in like London, like, you know, you'll have either like a huge bearish trend happen, or you're going to have a huge bullish trend happen, right? What this means is that, okay, now these big moves happen, so maybe those were your trades. Those big candles are your trades. Small candles are not your trades. The small candles mean, like, you know, like there's less weakness. You have a candle like this, like, you know, like, what does this mean? Nothing. It's bullshit candle. You have a candle like this, nothing. So when you have candles forming like this, there's a higher chance that there's going to be another candle that's probably going to form like this. So this big candle is going to be your move. So whenever you're looking at charts, whenever you're trying to identify moves, always look at the big candles and always ask yourself, okay, how could I have taken this big candle trade, right? Always ask yourself that. That's what I do all the time. Whenever I see big candles, like, you need to get some sort of a rush that, okay, man, like, you know what, next time I'm probably going to catch this big candle move, because that's your money trade. These big candles are your money trades right over here. Because now when you have big candles and you wait for trades to run, then you can afford to keep a stop at break even, because now you see, okay, now there's strong momentum, we have big candle moving, and the next candle is going to move down, and this and that and whatever you get. So always look to see, when you have big candles, how could you have taken the big candle moves? And if you miss the trades, that's totally fine, because you have missed the big candle move. So now what you're waiting for is to see that if price is going to form some sort of a support, and then you can turn around and say, okay, you know what? We have a support formed here because you have a bullish candles forming. So now the probability of price moving up is higher now, because we formed support after the strong move down, right? So big candles always mean that there was a huge push in the market, and that was the opportunity to make some money or to make some pips, whichever way you want to look at it as. And always look to see, how could you have taken that trade? Because once you make notes of how you could have taken that trade, and when the opportunity happens next time, you're going to be ready. Trust me on this. With practice, you're going to be ready, and you're going to say, okay, you know what? I've seen this happen, and I'm going to take this trade now, because I've seen this happen and this fucking works. Right? So, and it's all about probabilities, you know, all about probabilities. Like, what's the probability that's going to happen more often than not? So let's go to the next point. So what to wait for once price reaches support resistance. We've talked about this numerous times. You're waiting for candles to form in your direction. If price reaches support, you're waiting for candles to form some sort of a bullish candle. So then at least you can say, okay, now at least I know where my stop loss is going to be. Going to be below that candle. Or when it reaches resistance, you're saying, okay, you know, now my stop loss is going to be above that candle, because at least now you know where your stop is going to be. Because once you know where your stop is going to be, you can say that, okay, now I can probably identify my risk based on your stop loss. All right, let's go. Our probabilities, we've talked a lot about probabilities here too. So now we're going to do the next example here. So, what's happening here? So we have this big candle here, right? Big candle move. Now, let's say that we came to this chart, right? And we have this big candle move. So now you got to ask yourself that how could you have taken this trade, right? Basically, I think we've missed this trade. When we see a big candle, it basically means we've missed this trade, right? There's no trade, because if we would have taken a trade, this big candle was the trade. So now we're going to wait to see what happens next, or what the next candle prints, right? So now we have a bearish candle forming. What do we do here? So does this mean that the next candle is going to move up? Or is this a retest? Because this candle is bearish, right? So if we're looking for buys, we want some sort of a candle forming support, so we can say, okay, you know what? If this was a breakout of this resistance, then we need a bullish candle forming here, and then seeing that, okay, we formed support for us to move up, right? Because we are patient traders, we are all good traders, and we are waiting for confirmations, right? We're not trading for Instagram, we're trading to make money, right? We're trading for ourselves. That's what we're doing. That's the number one thing. You're not trading for Instagram. You're not trading to show off. You're trading to show off to yourself. So we're gonna wait. Now look what happened, right? We waited for the next candle. Now what will happen is that some people will try to take buys while this candle is moving up, but the key is that the candle has not closed, right? The candle has not closed. So look where it closed. It closed at this resistance. So what do? Nothing. You just wait. You just wait to see what the next candle is going to do, because this candle is obviously bullish, right? But it's closing below resistance. So if you're looking for buys, you're at resistance. But if you're looking for sells, the candle is not bearish, it's bullish. So you got to wait for the next candle. Let's see what happens. Now we have a bearish candle, right? So now a lot of people here in the chat, they're probably thinking that, okay, you know what? We've formed resistance, right? And this bearish candle, it closed below all these candles, right? And now if we keep a stop above here, we have a potential move down. So now where are we going to move till? We're probably going to move till this area down here, right? So what's the probability that price is going to continue moving down rather than it moving up and stopping us out over here? What's the probability? Now, some people, what they're going to do is they're probably going to keep a stop above here, or conservative people, what they're going to do is they're probably going to keep a stop above here. So now it's all about probabilities, right? Let's see what happens. There's a high probability that's going to continue moving down, then it's going to continue moving up, right? So let's see what happens on the next candle here. Look at this. We're still in this trade. We haven't stopped out. We haven't been stopped out, right? Because your condition of this trade is that as long as price stays below the high of this bearish candle, we should be continuing moving down, right? Most times what's going to happen is guys are probably going to take some percentage of the position off, because now you have a bullish candle, but you're still kind of waiting to see that, okay, you know what? It hasn't really broken above that area, so there is some sort of a chance that's going to continue moving down. Or, hey, maybe the next candle is going to stop us out. Let's see what happens next candle. Look what happened. The probability, it decreased and we got stopped out. You got stopped out because, hey, that was the probability of a trade not working out. Is that normal? Yeah, absolutely, it's normal. It's going to happen less times than it's not going to happen, which means that in this conditions, this will work out 60 to 70% of the time. And then obviously you're going to have those odds, those probabilities that it's not going to happen. So what do you do when you take a loss? You take this loss and you say, okay, you know what? This was the probability of me taking that loss, so it's all okay. It's all good, right? Because you followed your plan, you waited for prices to close, you had resistance, and then, you know, what happened? Maybe, maybe this was a support, and then, the probability wasn't there for it to go down yet. Right. So now let's see what happens on the next candles, and let's see if we can maybe do something. So let's look at the next candle here. Let's see how it prints. Oh, look. So, okay. Now, what does this mean? This probably means that, okay, now we're potentially heading down, right? We're potentially heading down because price, it tried to move up. Look at this wick here. What does this mean? Well, this means that price tried to move up, and then it looked left and it said, oh, Mr. Wick, you made a wick here for some reason. Okay, mate. So it moved down. It rejected that area. And then you had the next candle that tried to move up back in this zone, but it closed below all these candles to the left, right? It closed below all these candles to the left. So what does this mean? Now there's a higher chance that we are going to move down than we're going to move up. Let's look at the next candles here. See this? We moved down, and where did we move till? We moved till this area, this wick area where we had highlighted, right? But the idea here was that, okay, obviously we had a confirmation here with this bearish candle, but the probability wasn't there for it to move down yet, right? And then once you were looking at the charts, you're waiting, you saw this candle move, break below than all these candles. So you can say, okay, you know what? We got the Mr. Gladiator here, which did what all these 1, 2, 3, 4, 5 candles could not do. So now basically now we're trying to move down. Let's see the chart. So box and wait. Yeah, exactly. Box and wait. Box and wait. You're waiting for that one candle to break below or above than the previous candles. Let's see what happens next. Oh, okay, yeah. We continue to move down, right? So again, we had this big candle move. Big candle move means a lot of volume in the market, right? So you eventually caught the big candle move down. So when you caught this move down, it moved all the way down here to support. And when you're looking left, you see all these clusterfuck of candles. So you're saying, okay, you know what? Maybe price is going to have some issues here because you see this bullish candle, it rejected it. So now you place your stops at break even and you let the Forex gods do what they want to do with price. And what did they do? They kept moving down. And when price starts to move down, you're looking left to see the destination. Maybe the destination is down over here. Or if you're a conservative trader, maybe for you, the destination is down over here, right? Because you see that price stopped over here. It formed a bullish candle, but this bullish candle was very weak. Look at the body, man. This was very weak body. This does not mean we're going to move up. This was a very weak body candle. And the next candle, look at this candle. This is like that fucking golem from Lord of the Rings. Skinny candle doing nothing. No strength in moving up, right? So because you needed a strong bullish candle forming right over here, something like this. So you can say, okay, now we formed support and we can keep a stop down here and we can, like, you know, maybe move up. But this candle was weak, right? So you kept your stops at break even and you caught some pips and you're like, okay, you know what? We lost the trade, but then we eventually won a trade. Let's see the chat here. Don't worry about the time frame, just pay attention to what he's saying. Everything. Yeah, exactly. So it's this is just for the candles, you know. This is just, let's say this is a 1 hour time frame or the 30-minute time frame. Let's put it that way. Because you're looking for strong confirmation. And strong confirmations happen on 30-minute and the 1 hour. All right, let's go to the next one. Okay, so what's happening over here, mate? All right. So what do we got here? We have, I'm going to use my arrows now. We had a strong bullish candle moving up. So let's say that you came to the charts right over here. You had a strong bullish candle moving up, and then you had this weak bullish candle that formed, which dictates that, okay, you know what, maybe bullish momentum is dying down. And then you have this weak bearish candle moving here. So now the trend is bullish, right? You have a bullish trend, but you have a bearish candle forming. And then you have a weak bullish candle forming. So does this tell us that we're moving up? No, I don't think so. I don't think we're moving up, right? Because now what we got to do is we got to wait for the next candle to close, right? So let's see what the next candle does. Oh, we have a bearish candle moving. So now, perfect. We have a bearish candle forming. So now some people are going to say, okay, you know what we're going to do? We're probably going to keep a stop loss above this candle and then take a sell to move all the way down, right? But what you're not looking at is when you're looking left, you see this potential area over here. So now this is the 1 hour chart or the 30-minute chart, right? You're looking to see that, okay, now these candles, they rejected a price level. You know, there was some price level way over here. So they rejected this price. So this is an important price, right? So now when you're trying to take a sell and your potential destination is down over here, man, this is nothing. This is like very risky trade here, because your risk is up here and your potential reward is down over here, or maybe down over here, right? But you're looking at this, yeah, whoever did that, so you're right. So this is probably an area of interest. So I would say we're just going to wait to see what price does, because this will be a very, very risky trade if you take a sell, because you have that resistance to the left-hand side. So let's see what happens next. We're going to wait for the next candle to close. There we go. Perfect. What's happening now? Right? Now you have a bullish candle forming on the 1 hour time frame or the 30-minute time frame. And then you can say, okay, now if your bias is bullish and you're saying that, okay, our bias is bullish, we had a bullish breakout candle from this area right over here. We had a bearish candle forming, and then we had another bearish candle forming, but now we have a bullish candle forming, right? So now this means that this is the 1 hour time frame, right? So now we have found support on the 1 hour time frame, and probability dictates that since we had big bull candles and we have found some sort of a support. So now probability is that if we keep a stop below this candle, there's a higher chance that the next candle is probably gonna continue moving up and break this mini resistance which is formed, because, like, you know, we are good traders. We are trading when there's volume in the market, and we're trading the New York and London overlap, right? Or we're trading in London. So when there's volume, support resistances get broken in trending markets, right? Never be afraid of that. So let's see what happens next. Perfect. You have a move up, right? See, you have a move up, and when you look left, this candle, it broke above this mini resistance, right? So this is your chance to put your stops at break even, right? Because once you have your stops at break even and you're waiting for the next candles, you have continued move up. Make sense? So basically, you just waited. You waited for candles, because, man, like, you know, some people are going to say, okay, well, why didn't it come all the way down here to do a retest? But that's just how the market flows. That's the ebbs and flows of the market, right? You just have to be fluid with it. You have to wait to see what the candles are doing, what the candles are printing, right? So let's go to our, yeah, see, so now we came up and then we start to move down, right? So that's why you had stops at break even. You took profit somewhere here, and then when price starts to move down, either you closed position, or, like, you know, okay, so let's take this for example here too, right? So since price is moving down, you see this mini resistance. So obviously you're probably might think that, okay, you're like, you know what, probably we're gonna start to move up from here. But the candle is bearish here, right? It's a bearish candle. So you want to look for another bullish candle to be formed right over here, which is not forming, but there we go. So you'd want a bullish candle to be formed here, saying, oh, we formed support here because we had fucking support over here too. So now we should start to move up, right? So you got to wait for those candles to form, but you did not get that bullish candle. You got all bearish candles. So there was no retest. So we're going to move to our last example now. All right, so what's happening here? We had a strong bullish candle, and then we had a weak bullish candle, and then when you come to a chart, you see this bearish candle, right? So now this bearish candle has no lower wick. What does this mean? This means that this candle created no range for the next candle to move down, right? So we're probably going to wait to see how the next candle forms, right? That's the basic idea. Now we're waiting to see how the next candle is going to form. Let's look at this. So perfect. We're moving down, right? We're moving down. This candle formed bearish, and now the idea was that next candle is going to go bullish, so we waited for the candle to form, but eventually this candle formed bearish. And now when we look left, what do we see? When we look left, we see that, okay, maybe this area is going to be some sort of an interesting area. So what are we going to do? We're going to wait for a candle to form bullish candle because it's reaching this resistance area, resistance turns support. So we want to see if a support is going to be formed here, because if we can see a support formed, we can say, okay, you know what? Now we can probably take a probability buy, right? So let's see how the next candle closes. We have another bearish candle. Do we enter now? Some guys are going to enter now saying, oh, look, the candle formed with no wick, so we're going to enter now and take a buy. But it's risky. Look what happened here. This candle had no wick, but next candle went down. You know, it was the probability. So now you have to, so if you're looking for buys, you need to wait for a candle to form bullish. But you can't even take a sell here because you're at this very strong resistance turned support, you know, so you can't even take a sell because next candle can just move up or next candle can just move down. But if next candle moves down below this area, let's say, where's my arrow? Oh man, can't select my arrow. Yeah, below this area, then you know, okay, we're probably going to move down over here, right? Destination. So we're going to wait to see how this candle forms. There we go. We have this weak bearish candle. What do we do? So these, now you have to understand, these are 30-minute candles, right? These are 30-minute candles, man. So you're waiting. So what did you do? You waited 30 minutes. You waited another 30 minutes, 1 hour. You waited 1 hour, and then you waited another 30 minutes, 1.5 hours. So you waited 1.5 hours, and all you see is this bullshit mini bullish candle. Like, this means nothing. This is a write-off. Because look, price opened over here, and it closed over here. There's nothing. See, so now again, you're waiting. You're waiting to see what's happening next, right? Let's wait and see what happens. Let's go next. Nice. Now you have some sort of a bullish candle formed here, right? So probably you can say, okay, you know what? The bullish candle is forming, so maybe I'd want to wait for the next candle to form, right? Or if you are really taking, chances, you're probably saying that, okay, maybe I'm going to take a stop loss down over here, or you're going to wait for a more confirmation of a stronger candle to form. Perfect. This here is perfect. Now what you can see is that, okay, you know what? Maybe this makes much more sense. Maybe now we're trying to move up because now you have this strong bullish candle forming, and you can say that, okay, maybe now we're trying to move up. So now once you have this candle form, you can easily say that, okay, now what we can do is we can probably have a stop below here, or we can even have a stop below here and say that as long as price stays below this level, we should be moving up. Makes sense? Because the price made a high here. Remember we talked about this earlier. Price made a high here, and now it did a retest. So this is 2.5 hours into the session that you waited for price to form candles that you want to form. Right, so let's move to the next one. Now it's time to move up. We moved up till this region, right? And since we moved to this region and we are good traders, we took profits and maybe we put stops at break even because we identified that, okay, price is moving into this resistance area, which is where it might have some issues, right? So you took profits, you put profits at break even, and you let it run. Let's see what happens. See, this is a golden trade now. All because you waited for confirmations, you waited for price to form some sort of a support, you waited for price to form some sort of a bullish candle, so you know where your stop loss is going to be. Because once you have a bearish candle, you don't know where your stop loss is going to be. Will it be down over here? Fuck that. That's a big stop loss, right? So you want a bullish candle forming, so you can say, okay, I'm going to have a stop loss down over here, man, because, you know, probability dictates that once bullish candles are formed on the 30-minute or the 1 hour, there's a higher chance it's going to continue moving up. And let's see what happens. And then, you know, like, whatever, and then you got stopped out or whatever. And then now when you look left, you see the price came down to the same area, created this doji, created this bullish candle. So like, and then when you tried to take a buy over here, what happened? You got stopped because you're overtrading. Right? And then you turn around and say, oh, hey man, why did I get stopped out? And then the answer you're going to get is, well, you take one trade a day, keeps the stress away. So you took this trade in New York, London overlap, and then you tried to take another trade after London close when the volume is dying. And what happened? Your trade died with it. Okay. So, hope this helped some people, because, I tried to keep it as simple as possible. So, I'm going to
Find me.
All right, it's Ted. Okay, Ted raises his hand.
I'm here.
Okay, awesome. Man, that was pretty good.
That was pretty good, Rico. It's like you know what you're talking about.
Yeah.